Hey everyone, Oliver Bogner here, breaking down some of the most commonly asked questions that my clients are always asking me. So, number one, how does private equity actually make money? And are they actually motivated to buy my business? So, this is something that I think is a bit of a different dynamic, right? Most people are used to selling a house or selling property where the buyer might be in and out and like not sure and they have to come up with financing and it's going to cost the buyer a lot of money to actually buy the deal, right? It's a very different selling arrangement when you're selling to a private equity firm, specifically a lower middle market private equity firm. So you've got to understand kind of private equity 101, right? So there's $7 trillion of dry powder under management. These private equity firms, there's around 4,000 of them. They get this $7 trillion from nonprofits, endowments, charities, churches. If you've donated money to a charity or a university, it's probably sitting in the private equity asset class. Now, even they're taking money from 401ks, right? You have an option to invest in private equity as an asset class. This cash is sitting there. They get paid off of what's called 2 over 20. So they get 2% of assets under management, and then they get 20% of the upside. So the 2% of assets under management. Now, let's say you're a charity and you've committed to $50 million in capital for this fund. So you don't necessarily wire it right when it's called upon, right? Or right when you sign the documents. You have to wait for the private equity firm to call the capital. So you've signed documents, you've made an arrangement, we're going to commit to $50 million into XYZ private equity fund. That money is probably sitting in stocks, bonds, treasuries. It's not sitting in the asset class, right? But it's very, very easy to access. It's just not growing at a very high, if it's sitting in a bond, it's growing a couple points a year, right? The opportunity with private equity is you have these firms that are promising kind of 8, 10, 15, 20% annual returns. So the cash is sitting in this bond, private equity firm calls it. As soon as the cash is then called, they're then charging the 2% management fee. So they pay themselves 2% AUM, so 2% annually on all that cash they're managing. Now, they're not just sitting on it because they've got to be growing it. They have to deploy that capital, so it doesn't just sit in a bank account. So if they buy your business for $50 million, or let's just use round numbers because it's easier for me, they buy your business for $100 million, they're then charging their LPs $2 million in annual fees just for doing that investment. Now we can break that down at a much smaller level. Let's say it's a $10 million deal. Because they bought your business for $10 million, they're charging their LPs $200,000 a year basically for managing the investment. So that's why they're so hot to deploy capital. Private equity wants to deploy capital. They're trying to spend money. They're trying to buy businesses. It's part of their business model. They then get paid that 20% of the back end. So if they've committed to a 10% ARR or a 15% ARR, after that is achieved, they then get 20% of the upside. So they're basically trying to really focus on the return on invested capital. So that's why they're very motivated to deploy the capital. They cannot charge their LPs the management fees unless the money is actually spent acquiring a business like yours. If you've got any other questions, let me know. I'm an open book, can answer anything. Again, my name is Oliver Bogner, managing partner of the Advisory Investment Bank. We are a top 5 lower middle market investment bank focused exclusively on all things essential services: HVAC, plumbing, electrical, pest, fire, life safety, landscaping. If it's an essential service, we cover it, we know how to sell it, and it's a really, really crazy market for private equity consolidation in these sectors. Feel free to reach out, defendmainstreet.com. Again, our website's super simple, defendmainstreet.com. That's all we do all day long. Defend Main Street business owners against Wall Street.